Hello and welcome to Advizr. This quick video is intended to get you on board with our software platform. Advizr is designed to improve the client engagement and financial planning process. My name is Rachel Sanborn, and I'm the Director of Financial Planning here at Advizr. I'll be walking you through an in-depth tutorial of the Advizr platform. So let's get started. As a quick review, I just want to point out to you the functionality of getting around our program. So you may have seen in our earlier video, the primary controls for navigating the program are going to live at the top of the screen. There's the dashboard, the new client section to add a new client, and then to the right, we have your notifications for when your clients log into your portal. We've also got the help section, which is very useful if you need help with anything, including additional videos or on-demand resources, or simply to contact us with more information or to get help with a problem. Finally, we've got our settings section in the hamburger-looking icon at the top right. This section is really important to come back to anytime that you've been working on other clients. So I always start here in this settings sections when I'm working on new clients to make sure that I understand what assumptions I've made for my global settings. The first section is the general section. You can upload your logo, your custom signature, and any custom disclosures here. And then we've got your assumptions. So these are all the different rates of return, life expectancy ages, number of simulations, etc., that are going to be true for all of your clients whenever you run them. The last setting is one that I get a lot of questions on in our support line, and that is excess cash flow. So what we mean by this setting is what will happen to any of the dollars that are accumulating year over year. If a client has excess income over their expenses and goal amounts, you could choose whether to spend those dollars, which is the reality for the majority of your clients, or you can choose to save those dollars and allocate any extra cash flow to a particular goal. Our default is to spend those dollars since, again, that's the most realistic setting for most people. But if you have a particularly diligent client, you may want to choose the save setting, and then you can direct those dollars into a very particular goal. Make sure to save any changes before you move on from this page. We also have an integrations section here, so you can see what third parties we currently integrate with on an enterprise level. And the final section of settings is model portfolios. This model portfolios section really drives a couple parts of the plan itself for your clients, including their risk tolerance assumptions and asset allocation proposals when you're doing your calibrations for retirement. So come in here and look to see if these portfolios that we default to, which are the first 5 here, are sufficient for your needs. You may want to add a portfolio if you use a very particular model or separate account manager or something like that. And then if you integrate with Riskalyze, you'll be able to come in here and see what they have used as well. They're going to have some model portfolios for you in here with the correlated risk numbers attached to them. So let's talk now. I'm going to go back to the dashboard. Let's talk about how to actually build a plan. The flow for building a plan is a little bit different than you might assume from what we show over here on the left-hand side. As a financial planner myself in the past, the way that I would use this is a little bit different than maybe the chronological order. To me, it makes the most sense to skip the overview and leave that for the end, since this is not very useful until you've actually done a full plan for a client. You may want to just jump directly into the profile. If you've invited your client to sign up for the client portal by hovering over their name and clicking on Invite to Advizr, then they might have entered most of this profile information. If you don't think that they're going to want that type of access, you can simply enter that information yourself by going into each section and filling it out appropriately. If your client has entered the information for you through the portal, I suggest starting in the goal section and clicking on each goal to understand what they have entered and to make sure you really know what they're aiming for. They may have made some sort of mistake in here as well, so it's important for you to understand the accuracy of each different goal as you go along. Certain goals have some advanced features as well. So for example, let's just find one here. You may be able to add in a recurring large purchase goal. In this case, we have simulated a beneficiary IRA distribution. So you can make this recurring by simply clicking on the calendar icon next to the desired purchase year and indicating how many years it will be recurring for and what the cost will be. So then we want to review the accounts section. There's a couple of really important things to do here. Once you've already got some accounts in here, you may notice that certain investment accounts come over with an underlying asset allocation already pre-populated for you. This is going to be really useful for you and occurs most often when you have positions that are publicly traded and have a recent price associated with them. If those two things are true, we can run the underlying positions through Morningstar and come back to you with a very accurate underlying asset allocation for each of the sub-asset classes. If we don't have information for a particular position, maybe it's a separately managed account, such as in a 401k plan, or maybe it just doesn't have a recent price if it's a low volume traded type of security, then it may come back in as cash or unknown. So you'll just want to review the asset allocation on each of these different accounts to make sure that it is correct and that it reflects where they stand today. This is important if you want to see a true current situation for the client when we get to the financial plan. One other option you do have for any of these investment accounts is to override the hypothetical straight line average rate of return. This average rate of return is going to be used in most of the reporting that we do, including the graphs that you see in the plan, the reports on cash flows, the reports on future assets, things like that. It is not going to be used for the Monte Carlo simulation. The Monte Carlo will be driven by the expected returns and standard deviations for each of the underlying asset classes, for which the information comes from the JP Morgan Capital Market Assumptions, which uses a 10-year forward projection. That's important because you may see things like an expected return of 2.3% on cash. Just keep in mind, that's our 10-year forward projected average expected return for that. Also keep in mind that if you override the straight line hypothetical return, you might actually end up needing to delete and re-enter this account if you want to reset it back to what the straight line hypothetical return would be based on the underlying asset allocation, because you will be overriding it if you change it to anything else, and we don't currently have a way to reset that. Make sure to save any changes. And the other really important thing to note about accounts that a lot of people miss is when it's not a specifically related to retirement type of account, if it's a brokerage account or perhaps a 529 plan, you do need to make sure to earmark those funds towards a particular goal. In this case, we could allocate this brokerage account to as many of the goals as appear in the client's goal section. If you don't allocate it towards a particular goal, that goal, when it comes time to fund, will use all the other accounts first before using any unearmarked accounts. So that's important to note as well. All of the different types of accounts and other assets and insurance products will eventually show up on this list once you've added them in the other sections. So let's move on to the other assets page. This is where you can enter things such as real estate, business assets, pensions, and non-appreciating miscellaneous assets such as cars or jewelry, anything else like that. So enter your information here. The trust section is currently just going to collect the data on a trust for you. You could either just show the name of the trust, or now you can enter some additional information such as the type, the location of the trust, the names of the trustees, and the date of the trust itself. We'll be using this information in the future to propel our estate planning module, which should be coming out in Q1 or Q2 of 2017. The insurance section is where you're going to add any types of term or permanent or variable annuity type of policies, as well as disability and long-term care insurance policies. You can see here that we do allow for cash values on these and for asset allocation. So you can actually allocate the underlying cash value if you wish to do that. This is the best place to enter variable annuities at the moment until we roll out our variable annuity module. So that's it for assets. Let's get into income. For income, it's important to note that you can have your regular employment income If someone is about to start a new job, you could actually end that employment income by clicking on the advanced section. So you may have that end at a particular age. And you can add future income here by simply having a particular start and end year. So if you wanted to do a lump sum in the future, use other income as the type, select the earner, the amount, the start year, and set the end year for 1 year later. You can also select your own inflation rate if you don't want to use the default, and you could make this a tax-free distribution if you wished to. So if it's an inheritance, perhaps it's tax-free to this client. If you do not add a Social Security income for the client, we will project out based on their current income what we assume their Social Security income will be at full retirement age. If you do not wish to have a Social Security income, you can go into Social Security and add a $0 income. This is important for clients who are not qualified for Social Security, whether it's because of participating in a different pension plan, such as the railroad workers, Colorado state employees, etc. Add in a $0 income if you wish to not have them have any Social Security income. Otherwise, you can add in their monthly primary insurance amount, which is the full amount that they would receive at full retirement age with no adjustments. Even if you're going to have them start it early or later, add in the full amount that they would get at full retirement age here. And then if you have them start it early or late, we'll make the adjustments for you on the back end. You can also add in business income and real estate income here as well. For the taxes, the default is to automatically estimate this client's taxes based on the state of residence and their filing status. So you can choose to use this and we'll automatically estimate the taxes for you, or you can use your own effective tax rate. And remember, this is the effective rate, not the marginal rate. So add in what would be the average approximate tax rate for this client and their status. And then if you wish to use a different tax rate for retirement, you simply click on the advanced feature and you can add in a different tax rate for retirement there. Let's make sure to save your changes, and then we'll move into expenses. Often, when you first see a client, you'll see a simplified view of the expenses like this. Make sure, if you're using this one line item, that you exclude mortgages, loans, and systematic savings, since we pull those in on the back end. If you want to enter more details, you can use our detailed expenses section, which will show you automatically what we're already pulling in on the back end for any liability payments. But then you can enter specifics for each of these categories if you wish. You can also use this section to add in future expenses. So if you wish to add in expenses that will end at a certain point or that will start in the future, you would come to the bottom of this detailed expenses screen. You would add an expense. You would add it as an annual amount. And then click on the calendar icon to the far right, and you can choose the starting year and how many years it will go for. You can use this to do things such as car purchase down payments, future mortgages on future residences that you plan to have the client purchase or that they plan to purchase themselves, vacations, etc. You can also add in one line item if you wish to reflect all living expenses. Again, that can be monthly if you don't choose a future expense. Make sure to save your changes. And then under risk tolerance, this is where those model portfolios from the settings come into play. Here's where you're going to choose your proposed asset allocation for the client going forward. So make sure you choose the correct one here. Save any changes you make. And then the next piece, as I mentioned earlier, is I'm going to go right into the financial plan. For the most part, I'm skipping current finances unless they have linked up accounts where I want to review their cash flow. One other piece that the cash flow can be useful for is to populate the expenses section. So I'm going to show you a client that actually has some accounts linked up. If you have a client with accounts that are linked, you may see this button called Estimate from Transactions. Just as a note, if you click on this, it will override any numbers that are in these line items already. So make sure to take a screenshot and be really careful when you use this button. This button will take the average for each of these different categories for as long as we have for the client's transaction history, up to 6 months. So it could be as long as a 6-month average or as short as a 1-month average. Depends on how much history the client already has in there. We do try to pull in about 3 months of information when they first link up their accounts, but we may not be able to get more than 1 month of information. So just be careful when you're using that button, but it can be very useful for clients who don't know what their expenses look like. Moving back onto the financial plan itself, I'm going to go right into the goals section of the financial plan. So once I've finished evaluating the profile, I head right to the financial plan, goals section. If you have already run a plan for this client in the past, you may see this warning pop up. It's important for you to know what that warning means. It's not exactly resetting the plan, since any new information in the profile has already been included in these graphs below. But what it does is to reset this what ifs calibration section. This is originally intended to reflect what the profile says. So if you click reset the plan, it will reset the what if section here for each of these goals to match what the original goals were in the profile. If you don't wish to reset the work that you've done so far, you can click dismiss. I'm going to click on reset so that you can see where we're starting from with this client. So now this client reflects exactly what we showed in that goals section for each of their different goals. One more time, this what if section button is at the top right. We're going to click that, and then we're going to go through section by section across this gray bar at the top. You can think of this what ifs calibration area as your section to make proposals to the clients. This is really where you get into your recommendations. You can think of the profile as the current situation for the client. So you'll always see 2 columns, the current situation versus the proposed. Think of the current as the profile and any current information you've entered. The proposed is driven by this what ifs section in this financial plan goals area. In this case, if you see a client has excess funds left at the end of retirement and they don't wish to retire with a legacy, you can then proceed to play around with things such as retirement age. Perhaps they can retire a little earlier than they expected. Perhaps they can spend a little bit more. So go through and make your recommendations for each of these variables across the top. This cash flow area is important because it allows you to allocate any money that's left over when you look at the difference between their current income and their current expenses. So if they have a surplus, you could actually allocate some additional savings beyond what they do today to a particular goal. And if you want to see exactly what's happening and where the money is going right now, you can click on this button that says compare goals, and you'll see exactly where any of those extra dollars are going. If you click on this optimize button at the top of this section, we'll run an algorithm that's based on a couple of factors. The factors really primarily are the distance in terms of dollars your client is from their goal. So if they still have a long way to go to save for a particular goal, we will fund that goal more heavily than a goal that they're very close to reaching. It's vice versa for a goal that's happening sooner. So if a goal is happening very quickly, we're going to fund that more heavily than a goal that is further out time-wise. And then the last piece of the algorithm is that retirement is hard-coded to be weighted about 4 times more heavily than any other goal. And if you had an emergency fund goal, that would be weighted about 2 times more heavily than any other goal. You can see here that our system has allocated certain dollars to each of these different goals to help fund it. And there is some surplus remaining at the end of the goal. You could allocate up to the entire amount of the surplus for every single goal if you wish, which would create a shortage situation. So as a reminder, if you do create a shortage, this shortage is basically you telling the client they need to cut $800 a month from their budget. You could choose to use this as a goals-based or aspirational-based planning scenario. So if you just want to tell the client what it would take to get to their goals without consideration for what's realistic for them, you can use this. Or you could keep it very realistic for them by only allocating what's available. And you can use the sliders, or you can type in the amount yourself. This is more accurate when you're actually looking for a very particular dollar amount. Okay, So we've allocated our dollars. I'm going to leave some money left over in their budget just in case they actually are spending more than what they assume right now. So now we have our additional savings allocated towards retirement. The next piece I want to review is the asset allocation. So remember, in the risk tolerance section of the profile, you have basically chosen their proposed asset allocation. So you can see here their current allocation and that expected return and standard deviation versus the proposed. If you wish, you can change their pre-retirement asset allocation to any of those other model portfolios that you have, or leave it at their current allocation. That's an option in the drop-down menu. This section here at the top is for their pre-retirement asset allocation. And then you can also choose a different post-retirement asset allocation if you're going to recommend that the client get more conservative in retirement. The next calibration is Social Security. So again, you can determine when you want to have this client start their Social Security. If you wish to have them start it early, or if you wish to have them start it later, we'll do all of the necessary calculations to determine what that primary insurance amount would be reduced to or increased to. So just simply enter their primary insurance amount in this line. It should be pre-populated from the profile section, or we'll project it out if you didn't enter anything for the client. You can choose to not file for special benefits if you wish to not include the spouse in the Social Security calculations as well. The stress test is a fun way to see what would happen if things changed, if our underlying assumptions changed, especially in retirement. So if inflation was 4% instead of 2%, what would happen to their plans? This is especially useful when you're looking at the Monte Carlo simulation, because then you can see how that changes the likelihood of success for this client. You could also do something like, what would happen if the market dropped 20% in the year that this client retires for 2 years? And rerun the Monte Carlo simulation that way. So you can see that that probability of success drops pretty drastically. And just remember, you can always flip back and forth between these different charts if you wish. Now, remembering that this what if section drives all of your proposals and the plan to the client, make sure that when you're finished in this section for each goal, that you save it and that what you've selected is what you wish to show in the plan. If you don't wish to show these stress tests, then you may just want to write the numbers down to present to the client separately and then unselect them. Once you've saved the what ifs, come back down to the bottom of this section for each goal and make sure to add in your action steps for the clients. These can really help you drive the conversation that you have with your clients and set an agenda that the client will then be able to check off if they have access to the portal. So it really enables great interactivity with the client. So add in some very particular action steps. And then if you need to add in any additional tips, you can add them freehand in this box. And all of this will show up in the plan that you present to the client. You're going to want to do this for each of the different goals that a client has. So education will have its own what ifs section. Debt management will have its own what if section, etc. Make sure you go through each goal by goal, using either this drop down or at the bottom of the page using the previous and the next buttons. Add in all your action steps. Add in any additional tips you may have, as these will show on the plan that you present to the client. Once you're settled with your recommendations, you can use a couple different reports to help you understand exactly what the plan is proposing. The projected assets report is the first one. It's very useful. You can simply hover your mouse over each of these different numbers to see exactly what the underlying accounts are doing, where the money is coming from, and where it's going, as well as the total portfolio value at the end of the year. And you can do this either for the proposed plan or the current situation. And you can compare the two to understand what changes we're going to have the client make. The same thing goes for the projected cash flow report. It's going to start based on the proposed plan, but you could look at the current situation as well and compare the two to really understand what's happening in the plan. And this is going to be a year-over-year projection out until the end of the plan. You can expand each one of these line items to really see exactly what's coming in and going out. And that'll help you better understand exactly what's happening in the plan again. So take a look at that report. Another report that you can look at is the asset allocation report. You can either look at the basics or the details. And you could choose to look at all goals or pick a particular goal, a particular account, a particular owner, or a particular tax status. So choose what you're going to look at here, and you'll see expected return versus and standard deviation for the current allocation versus your proposed portfolio. Finally, you're going to want to review this list of action steps because this is going to be generated as part of the plan. So make sure those action steps on those goals that you have set are correct, and if you need to add a new one, you can simply click on Add a New One here. Once you've done this, now it's time to go back to the overview page. In this overview page, you can add up to 250 characters of a summary. This will show up right on that overview page for both you and the client. You can also see their net worth. You could see their cash flow if they had accounts linked up. You can see their current asset allocation. You can see whether or not they have any action steps that they're required to do. And they can see their graphs of various goals. If you wish to present this to the client, there's a few options for doing so. The first and probably the best way is to present it to them either live or remotely, and that's to go into the presentation mode. This will white label it with your own company's logo, and it just cleans it up a little bit for you to show to them. It shows the same overview page to start with, but you can edit anything in the profile. You can look at the current finances. You can look step by step through the financial plan. And in the goals section, you can actually change those what ifs on the fly with the client. This is very useful for interactivity and encouraging your clients to participate in the process. So we highly recommend that you use this. Once you're settled with all of your what ifs, you've made sure that all of the accounts are correct with the client. You can show them that they have access to this document vault. This is what they would see. This view is basically what a client would see once you give them access to their financial plan view, which I'll show you in just one second. They also have access to a document vault that's secure and encrypted where they can upload anything such as pay stubs, estate planning documents, insurance documents, account statements, etc. And then you can upload their financial plan for them. This is where you would trade information. Once you've presented this to the client, then you would close this window and go back into your main view. And now you can generate a PDF of the plan, which reflects all of the changes you've just made. It takes about 20 seconds to run that because it's doing it as of right now. So it's going to take a current snapshot with any changes you've just made, and it's going to download it into a PDF. In the meantime, let me show you how you could switch this client to view their financial plan rather than viewing the data gathering wizard. When your clients are first invited to the portal, they are going to be invited into the data gathering mode, which is our wizard mode. Once you've completed a financial plan for them, you simply hover over their name, click on Configure Access, and then you can change whether they're in financial plan mode and they'll be able to see exactly what I presented to you in the presentation mode, or if you want to switch them back into wizard mode, perhaps at an annual review where you want them to update their data. Just remember when you want them to see their financial plan and their information that you've created for them rather than the wizard, you need to switch them back into financial plan mode. That's the current summary of how to run a plan. Once you have finished running this plan for them and you have a PDF that you would like to upload or any other documents you might want to upload, you can come back to the document vault section here on the left-hand side, and you would simply upload a new file for them. If they have uploaded a file for you, you could click on it. Let's look at our client here, Nick Matthew. And you may notice at first that there's a little pop-up blocker. Since this pops up into a new window, if you cannot access the document, just check your URL address bar at the top of your web browser for a pop-up blocker. You may need to allow for pop-ups. Once you've allowed for that, it will pull it up in a PDF format and you can see it right there online. That concludes the detailed overview and demo of Advizr software. Please feel free to reach out to us anytime with questions by writing to us at support@advizr.com, or you can click on the help icon and you can click on Contact Advizr. Any requests submitted here will come directly to us at support@advizr.com. You can also reach us on our 800 number at 844-223-8497. And you can also always check in to see if we're doing additional training sessions on a weekly basis. Thanks so much for joining us, and we're excited to have you get started.